All right, let's get this going. Welcome, folks, to our governance call number 31. And we skipped the one last month, so we are going to make up for it this month here now and bring you some interesting topics to govern and to discuss here. And the agenda for today is to start with a governance update, a brief one, and then we have a proposal from the TAG, the Treasury Advisory Group, for a strategic token swap that we will hear about as well. And there's another proposal as well for renewing the rewards for the RWA lending market on Morpho. And there are a couple of other things we would like to talk about as well. Let's see how much time there is. But let's start with the governance update. And I'm going to share my screen for that purpose here. So the most recently ended proposals in our DAO were CP 128, 130, and 131. Oh, please, if there are anyone who hadn't unmuted themselves, just please do it just in case. Feel free to talk at any time, but when you're not talking, just please mute yourself. So yeah, the three proposals that have ended, one was the CP 128, which was changes to our governance process, and more specifically, it introduced a milestone-based funding process. And then there are CP 30, that is also related to the Treasury and how to make Treasury proposals and what kind of criteria they should fulfill or meet. And then the last one is CP 131, which was the recovery of a user who lost who got their token stuck in the CFG bridge to Ethereum. And all of these proposals passed. Now, there are 5 proposals live right now, and CP 127 is currently on hold for technical reasons. That's to open cross-chain channels with 11 other blockchains. And then there's CP 132 and 134 that are both on the agenda that I mentioned earlier. And then we have 2 pool proposals to launch a pool on Centrifuge. And the one from Marketland, we heard about 2 months ago, and Michael is also invited to this call today to take some more questions if needed. I haven't seen him in the call yet, but hopefully he will join as well. And then there's another pub from a project called Africred, and I'll paste the link to this page here, the governance update, in the chat. I see it already happened. Thank you, Iman. So you can go and read about these proposals in more details. So that's the quick governance update. Let's move on to the agenda. And Kate, you want to add something?
Yeah, I'm just curious on the past proposal CP131 recovery of lost tokens. Is there any technical update on this bug or this error where people get tokens lost in the bridge? Is anyone technical on the call that can update to whether this has happened again or anything like that? That would be really helpful to know. Even if one maybe knows.
I agree. This is, I don't know, I don't see anyone from the technical team present, but it's definitely something we asked as well, like, because it has happened before. This is the second one that has been submitted. I personally don't have any news to share, so maybe someone will join later during the call and we can ask again. All right, if nothing else, then we can move on to the first point on the agenda, which is the proposal from the Treasury Advisory Group to implement a strategic token swap. So let's hear what that is about. Cesar, if you're here, can you please give us the highlights of that proposal, what it means for our DAO? And
Yes, sure. Can you hear me well?
we can.
Can I share my screen?
You can.
Can you enable me?
I can. 1 second. I just, yeah, please try again now.
Is it visible?
Yes.
So we are here with a different and interesting idea: strategic token swaps. Basically, strategic token swaps mean there are two parties. Let's say Gitcoin. Gitcoin wants to give their tokens to our treasury. We want to give our tokens to their treasury and establish some mutual relationship and benefits and explore opportunities together. What can we do together while establishing some trust? So this is the main idea that we thought maybe it can be helpful to utilize our treasury with diversification and many other points. But why should we do token swaps in the first case? So high level objective is definitely improving our treasury management and positioning ourselves within the ecosystem by fostering relationships. This is one of the most important things. And the other thing is interacting with other projects, third parties, stakeholders, maybe companies, to see if we can create a mutual opportunities together to benefit from that. This is the thing. But we need to underline this. So this is the sweet spot. We are not advocating as a tag to this proposal. Yeah, let's 100% do it, or let's not do it. We thought that it would be good to discuss and explore how this thing can be useful and valuable for us. And if it is, let's do it. If it's not, how can we polish it? This was the main idea. Previously, over than 50 token swaps already executed since 2021, including one of the pioneers within the ecosystem like Balancer DAO, Bankless, Celo, Gitcoin, Enter DAO, GiveF, Thales, and many more. So what happened? Like over 50 token swaps completed as second quarter of 2024, and $90 million value of tokens already swapped within the projects. And I need to show this. Yeah. And some of them already revoked. Some of them were just optimal, soft-ended, dormant, active. So different cases happens in here. So it doesn't mean it's perfect. It doesn't mean it's just worst case, but it's definitely worth to analyze and inspect. And top 10 DAOs by swap value. I think you remember Olympus DAO from DeFi 2000. They are leading the token swap team. Also, Tokamak, Frax, they initiated with token swaps at 2021 with Prime DAO. And since then, other DAOs and projects are already swapping their tokens. So, but how did they evolve? Like as I said, it's all began at like 3 years ago. And since then, over than $80 million of value has been already swapped. A couple of partners already benefited that. And some of them just went away from the ecosystem, which is a cautious point. But what is the benefit? What are the benefits of token swaps, right? So the first thing is governance participation. Let's say we are currently in close relationship with Polkadot ecosystem. If you want to get more voting power on Polkadot governance forum to support Centrifuge DAO's proposals, or Centrifuge DAO's members like contributors' proposals, or some other third party that we are in a relationship that we can utilize it. So it's like kind of like political game, but within the Web3 ecosystem that we can utilize and have some power around their governance. This can be Polkadot, this can be a small project, newly established DAO, or just a dormant existing company. This can happen. And also, if we swap these tokens, we can say we can delegate our tokens to our community members. So if somebody comes to us, hey, I have a cool proposal at Optimism, but I don't know anybody on Optimism to support me. Do you guys have any? We can give out the tokens that we have, if we swapped, and if we think it's valuable, I mean, as a DAO. And then this can be established. There can be frameworks built on top of this idea. These are just ideas. Think about that like we are just brainstorming. I'm just leading the conversation. So there isn't a certain thing yet. Exclusive partnerships. It's if we hold their tokens, if they hold our tokens, this means trust. Trust is the first case on the establishing partnerships, and collaborations and opportunities to seize together. So it can be happen via smart contracts, maybe with vestings, maybe with cliffs and some things, to see how each party is developing themselves and how each party is collaborating with each other. And risk sharing in this ecosystem, like in this volatile ecosystem, it can be used as a treasury diversification to hold some different tokens from different parties. This would also require some expertise to determine which parties to swap tokens or what. Deep integration, we can say, like if you build on Centrifuge chain, if you build on our technology stack, then we can swap your tokens. And you can use your tokens at like on our funds, on maybe staking. So it can create some different opportunities. These are just few aspects. Some proposals can focus on financial side, some proposals can focus on political side, and some others just on the technology side. It all depends on the aim that DAO wants to establish. But we should be cautious while approaching these token swap initiatives. Why? Okay, there's like lots of token swaps happen, values are good, but limited success stories are existing. Some of the DAOs already disappeared within the ecosystem. Some of the projects didn't really benefited from those swaps, but some of them are really successful and still building their partnerships for the last 2-3 years and even earned lots of money around that. Potential for distraction if some parties too much focused on the diversification, token swaps, it might lead to misusement of treasury and which leads to token down. So we don't want this. Project cult is another success thing that we already mentioned in the previous slides. And also market volatility. If we want to prioritize the treasury first, then we need to be more cautious to approach which parties to token swap and analyze their tokens performance regarding the other aspects. Okay, who we have as potential partners if you want to take the lead and push this thing forward. So currently, Arbitrum, Aave, MakerDAO, Optimism, zkSync, Cardano, and Layer 0 are looking for some token swapping partners. And especially in Arbitrum's forum, some things are cooking on. They're relentlessly discussing this topic, if they should integrate token swaps within their Arbitrum projects, recently initiating Arbitrum projects within the Arbitrum Foundation. There are like more than 150 comments. So we also left the sources on the proposal. If this is interesting for you, you can check out their forum. What are they talking? Why they are cautious about this thing, or why they are supporting token swaps? Okay, token swaps. How is this process going to happen? There are 3 stages. Pre-swap is determining the target partner and reach out to them if they have also this interest to think. And if yes, let's negotiate how many tokens we are going to swap, in which period, and how it's going to be happen. On the execution phase, we can use smart contracts, third-party platforms, or just moving average, just market buying, or maybe something like Hydra DX. And after that swap, this is the most important thing, especially business developers within the DAO ecosystem. So we need to follow up closely how they are utilizing our tokens. How are we going to utilize their tokens? Is there any other possible way to leverage this thing? And else. We have one dormant case that we have seen in the past. Aave and Balancer, they swapped their tokens and they earned a couple of benefits on their each side. Aave's perspective, they enhanced their Aave's liquidity and stake their tokens to Balancer's pool while earning passive revenue and increasing the total value locked. And also governance influence. With this approach, they are now more dormant in Balancer's governance, and they're just riding some of their horses. And strategic partnerships, like they have been following this partnership for the last couple of years. So they are still collaborating, cross marketing, and developing a couple of things together. And also these conditions are applied vice versa to Balancer. what did they do? They did swap like 200,000 balancer tokens for almost 17,000 AVE tokens using the 90-day moving average. And they use a smart contract to execute the token swaps. And some parties use their tokens to lock and stake. In this case, while we find this thing useful to discuss, we have a couple of concerns that we couldn't decide, and we think that we have to decide altogether. If we say, yes, we should go for this, who should manage the swap tokens and under what governance model? How should the token swap be executed technically? Should we develop our own smart contract? Should we use the third-party platform? Or should we use just fork one of the projects that provides token swaps utility in open source? Or we can just do over-the-counter deals or maybe market buying. I think it's gonna definitely change on the cases, but we should establish a consensus on that. Token utilizations, how should acquired tokens be used? Are we gonna aim for the governance, on their governance to get some power? Are we gonna just want the revenue as a staking or something? And delegation thing, should there be a new delegation for this incentive? Should we form a new group who will just look for token swaps and execute and maintain this thing? Or should we implement a bounty system for community members? Let's say if you find us a partner who will initiate a token swap with us around like $10,000, you will get a 0.1% commission. I'm just saying. So this can be a case, that can be a framework, or how should we move forward if there is any other ideas? And how will the token be stored? Is it going to be stored on the treasury, or it's going to be stored on another proxy or somewhere else? And yes, that was my part. I hope I didn't take you much time. And here are the questions. If you want to give feedback, just shoot it directly.
Sounds good. Thank you very much, Cesar. I'm curious to hear if there are any people in the call who have experience with this and can share their thoughts, or in general talk about what they think about this approach. Don't speak all at once.
I really like the idea that, you know, we're starting to think quite strategically about, you know, about the alliances. Nevertheless, there are two factors that I think we have to balance. My assumption is that when the coins are sitting in the treasury, they have zero voting power. Is that correct?
Yeah, it depends on the protocol actually, but yeah, mostly.
So, I mean, clearly, you know, when we swap out of treasury, by definition, we allocate voting power, and that's, you know, the way it is. So that's fine. On the other hand, and I don't know how much is in the treasury compared to what is outside the treasury. If, for example, at the extreme, the treasury is twice what's already outside, then every time that you're expanding, you know, the treasury, you're widening, maybe even disproportionately, the external voting power, and I'm not sure where that line is. So I only say that you need to kind of think that through. And then, you know, if, for example, you'd have swapped for Bitcoin, you know, 3 weeks ago, wow, you know, Bitcoin's like practically doubled, right? But if it goes the other way around, you're going to pick up all that volatility. And I don't know if your intention is to pick up all the volatility that comes in from the other coins and Centrifuge's volatility relative to the other volatility. And I'm not sure how weighty our voting power is compared to the voting power that you pick up. You know, the 100 tokens, for example, that we swap to Bitcoin might be a drop in the bucket for them, but hugely significant for us. And I'm not sure where the benefits that come in. So I think there are more questions than answers. But if used correctly or used properly, this is a great resource, and you should definitely be thinking about it. Sooner or later, this is sort of the natural evolution. There will be these kind of, for lack of a better term, mergers and acquisitions, or merges, or whatever you call them. And that's going to be bound to happen. And if it's going to be happening, then you want to benefit the best you can from that. You don't want to be left out of that on the sidelines if there's value to be realized. So, I think you're heading in the right ballpark and everything, but I have more questions than answers, and that's my only comment.
Thank you.
Perfect. Thank you. Let me address the Orhan, you're gonna say
Yeah,
something?
there's some people waiting to ask as well, but if there's something you want to quickly respond to from the chat, go ahead. But yeah, there are two people raised hands, but just go ahead and answer.
Yep. Okay. So the first question is, I guess, how to utilize voting power. So it depends on the purpose. Let's say if as a DAO think, okay, we need to get more power within Arbitrum, we can say that, okay, let's deal with Arbitrum. Whenever it happens, we can lock our Arbitrum tokens on their platform and gain some voting power. And we can delegate that voting power to community members, or just maybe some another council or somewhere else. It depends. If we don't want to use as voting power, we can store it on our treasury. But if we want to earn some money, we can also stake the tokens to somewhere else. So it all depends on the purpose and aim. And about the volatility, I think, yeah, it's definitely a crucial point. But the thing is, like maybe a couple days ago, some coin just pumped a 10,000 ratio or something, like huge, right? You should have maybe think about, okay, why didn't we swap their tokens? If we have swapped their tokens, maybe we could benefit. So it depends on the project, and it depends on the analysis. We need to approach cautiously and analyze projects and filter them. We shouldn't go to any project and just swap tokens and see. But imagine that we are discovering new Ethereum, or we are just seeing a very good future projection at Solana or somebody else, then we can consider about, okay, we can swap the tokens for financial considerations, maybe. Should I read the
yeah, Jonathan,
chat?
I think Jonathan had his hand up, so just go ahead.
Thank you, Orhan. I would first echo the previous point about a token swap actually increasing risk versus risk reduction, and a decrease in voting power based on the voting power of the CFG token. As someone who spends a lot of time unpacking, governance and governance power within a token, there are not many tokens I would trade for the CFG token as a improvement on the existing voting power. That being said, I think what you're asking for is, where are the next ideas or future projects where new value could be created? And I think a bounty system would be a good top-down guidance of what the potential bounty could be provided under what constraints, or what framework. As I kind of mentioned in the ambassador's call, I'm going to very publicly lean heavy on the tag group, because it is the consideration of the tag group to have considered the strategy for the proposals and any risk. So when you're opening up an open forum like you are, you're really inviting more risk than should, versus if you were simply providing constraints. So my recommendation is come up with a framework for a grant to get the most feedback from everyone here in the governance community and the community at large. But I do think a guidance of a grant will stimulate the conversations that could lead you to the project you're looking for.
Thank you, John.
Thank you, and definitely agreed. We had this discussion in our today's tech call with tech members, and we are definitely thinking to move forward with these ideas and come up with some grants framework and ask DAO if they want this or not, but we are trying to work on that. So it's appreciated. Thank you.
There is one more hand and one more comment in the chat, and then I think we should move on then after that, because we are running not short on time, but we have a couple of other topics. So let's take two
Okay.
more comments. There is one in the chat from Eshwar as well. But Ryan, you've been waiting as well. Please go ahead.
Yeah, I'll be very brief. In general, I just wanted to say I kind of support the idea of doing some of these token swaps, especially for not any of these other concerns notwithstanding. Obviously, these are important points that have been broached. But more importantly, I think especially for some of the legacy DeFi platforms to really solidify the partnerships that we've already had, really just putting, quote unquote, skin in the game, especially with MakerDAO, Aave, Arbitrum, the ones that we already, they're legacy. These are big, important protocols. I think just to demonstrate that we're holding their assets as they're holding ours, and just kind of showing that there's some, collaboration between these protocols is a good thing, especially for the outside world from an optics perspective. But yeah, I think all the other points were really good. I just wanted to kind of signal my favor for doing these kinds of things. It would depend, of course, on the asset, on the token, what the protocol is, right? That's where we have to kind of dig into some of the granular details. But also I shared this on the ambassador call yesterday. I do have to get inside to a doctor's appointment for in the next 5 minutes. I'm going to try and listen, but this building has notoriously terrible signal. So if I suddenly drop or whatever, hopefully I'll get to watch the rest of the recording after the fact. But thanks so much for giving me a moment, Orhan.
You're welcome. Always welcome, Ryan.
You can add a couple of sentences to this. I will keep it short, Orhan. So this can be also idea. So let's say Ethereum, Celo, Solana is holding our CFG token. We can also market around that. This can be also give us credibility for Centrifuge token. And yeah, that's it.
There was a question from Eshwar in the chat, what will be the impact on the CFG tokens if some of the ecosystems that we partner with is close to dysfunctional over a period of time? Does it make sense, or the question?
Kind of makes sense. I'm gonna answer as I understand. So in this case, we can implement what was the name? I'm trying to know, cliff vesting. We can implement a vesting period for each party. So they're gonna take our tokens in every 2 months, and they can't sell within 2 years or 3 years. So there can be implemented some conditions on the proposals and agreements. So this can be prevented to let them don't dump our token.
Yeah.
Does that make sense, Eshwar? Is that answer?
Yes, definitely. No.
Perfect. And Jay asked an important question as well, I think, whether each specific token swap is going to be up for a governance vote. And the apparent answer is yes, right? This DAO need to approve of every swap, and this is the framework you're trying to establish here.
Yes.
Cool. All right. This is a great discussion. We could have dedicated the whole call to this, it seems, but we do need to move on the agenda. But thank you, everyone, for contributing to this, and thank you, Cesar, especially. All right. Moving on to the next point on the agenda, we have another proposal in our DAO to renew the rewards for bootstrapping liquidity on the Morpho market. And there was one a couple of months back. So this is a fill up of the reward, so to speak. But Grayson, if you're here, would you mind telling us a little bit about what that proposal is?
Yep, definitely do that. So starting in August, we had launched the Anemoy Liquid Treasury Fund use case as collateral on Morpho. We had initial rewards on that for a couple months. So far, it attracted $2 million in USDC at its peak like a month ago, which is like a really great use case to show, you know, compliant composability within DeFi, like, you know, leveraging DeFi smart contracts for compliant assets like LTF. So it's a really cool use case. It allows, you know, real world asset yield to be distributed in a permissionless manner indirectly using morpho markets, and allows LTF users to get liquidity on their RWAs. So it's a really great use case. We've gotten a lot of great press from it. We've got some excitement, and I think we put the proposal up to basically extend the CFG rewards on the market to boost the yields, depending on the CFG price and how much USDC is in the market, somewhere in the 6 to 8% range for another 3 months. So that's basically what this proposal is. So it's a pretty low cost way to continue to attract capital. And yeah, we have a couple partners that are keen on using this market to earn yield, and these rewards are definitely a good way to get them in the door. So yeah.
Sounds good. And it's 90,000 CFG that is being asked for to cover for 90 days, right? So 1,000 CFG per day.
Yep.
Yeah.
90,000 CFG or 1,000 CFG for 90 days. Those CFG are distributed to all the USDC suppliers in the lending market pro rata. So if you have 50% of the market, you'd be getting 500 CFG per day.
All right. And this is going to be a treasury proposal that is going to be voted on as well. But are there any thoughts on this proposal? Anyone who strongly agree, strongly object? Somewhere in between? All right. Well, if there are, I think, Ivan, yeah, you already posted the link. There is still time to add your comments there if you need, and then this is going to move on to a vote, right, Ivan?
Yeah, he's now submitted on council motion and should be live in 4 or 5 days and on chain botting on Centrifuge chain.
Yeah, and all the CFG token holders can vote on this this treasury proposal. So we'll post the link for when we get there. And also forgot to mention that in the previous proposal that Cesar talked about, the token swap is also going to be up for a vote at some point, and we will also announce that one. Okay, if that's it, then we can move on to another point that is not added, but was added last moment. That's why it's not on the list, and that is from Michael. I can see you here. Just to give some background, you were here on the call 2 months ago and talk about the POP, the pool onboarding proposal that you submitted on the forum to launch a pool, not launch a pool, but launch a pool on Centrifuge chain. And it was a little bit rushed. It was towards the end of the call, so there was not a lot of time. So can you give us like a quick, like 1 minute sum up, if possible, of your POP, and then allow our DAO members here in the call to ask clarifying questions if needed? You're muted. No problem. That's the universal sign for 1 second.
Voila.
There it is. Go ahead,
Yes,
Michael.
sir. So the Market Lend credit, U.S. consumer credit fund, what we do basically is we buy loans that are originated by so-called peer-to-peer lenders like Prosper.com and LendingClub.com. In fact, those are the only two that we're buying from at the moment. So we call these platforms originators. The originator's job basically is to go out and take in applications from consumers who want to maybe refinance their credit cards or have a wedding or get dental work or anything like this. We only buy the loans whose stated purpose is to refinance credit card balances. And so that's, you know, that's our niche. And over the last several years, this has proven to be a really, really, really good asset class. Typically, credit card receivables pay between 8 and 25%. The default rates down at the 8% level are sub 1%. The default rates at the 25% level can be as much as 10, 12% or something like this. And when you net out everything, with the losses from defaults, you wind up with a nice, steady return. And in our case, we're generating something on the order of 7.5% per annum for our holders, year in, year out, month in, month out. We do this because we keep a provision against losses. So we have a nice, long, slow, steady ride up instead of the, sawtooth of, wow, up 2% this month and then down 0.5%, So this is basically how we do it. And, the capital in there has been mainly, friends and family money. We've done this we've done this for the last 10 years. About 7 years ago, we set up this actual fund. And the concept is basically that I think that there's a desire among holders of cryptocoin to swap or borrow into real world assets. And this is a great asset class. It's remarkably stable. It has very low volatility. It's quantitatively and qualitatively easy and verifiable in terms of the NAV. And so my idea is, let me start with first the basic pool that will just enable people to use stablecoin to buy units in the pool. Stablecoin gets converted into dollars, which then get converted into loans. Then I want to tack on two products around that, one of which basically levers up, allowing the junior token holder to make somewhere around 12-14%, and the other which is protected from a lot of the downside and makes maybe 6.5% or something like that. The average maturity is overall 3 years. Every month there's principal and interest repaid from all the loans. So we could actually be paying principal and interest out monthly, or people can reinvest. And so this is my idea. And I want to start by initially having just the basic long-only pool. And as soon as we get our operations in place, we can add the senior and junior tranches around it. But I want to get the ship in order, and I want to make sure that it beds down well, because frankly speaking, I've never done shareholder registry on a crypto chain. Yeah, from our perspective, the fund's perspective, the shareholder will be the pool, and then from the pool's perspective, all the token holders will be there. That register of holders needs to be really, really, really secure, obviously, because I only know the pool as my holder. I don't know all the token holders. So it's really important that, that there's a robust token record keeping system. And as long as that's the case, then, it's a huge win. I'm going to close with one thought. I came from the hedge fund business. And in the hedge fund business, we had a product that we called the seed product. For example, one of our first funds, New Alpha, French company, came with 20 million euros. They put it into the fund for 3 years. And in exchange, they got 30% of our management fees. Yeah, for the next, I think, 6 years. And they didn't have to keep their money in after year 3. So I can structure something like that for Centrifuge. If you help us, by getting this pool onto the chain, and we start reaching out to the community, and we build assets under management, we can treat Centrifuge like a seed investor, essentially, and we can share our management fees with Centrifuge. It increases the yield on the native basic ownership from about 7.5 to something like 12, depending on how big, we're able to get the management fee. But the point is that we want to share our revenues with this. We're not, we want to make sure that Centrifuge is well compensated for the work that gets done and for this. And so this is what we'd like to do.
Thank you,
And
Michael. Are you up for taking some questions from the
yeah,
DAO?
I'm
Let's make
happy
sure
to
there's
take any
time.
questions. I will also make one note. It's hard to reach out to reach the Centrifuge community because you don't really know who they all are, and it's not like, and it's not very easy to message them. What I found out is that by systematically sending DMs to Centrifuge holders, I was able so far to reach everybody from a 0 to an E. And I've noticed that the views have climbed from 60 to about 208. So clearly somebody's starting to look at what's going on, and I'm happy about that. I reached out to John Marketing, but we haven't been able to coordinate. But the point is that I'm going to make a real concerted effort to reach the Centrifuge chain and beyond to get people interested in this product. All we have to do is have the operating process right.
Thank you, Michael. Let's take some questions from anyone here in the call, because there wasn't a lot of time the last time. So go ahead.
I have some quick
Jonathan, I
questions.
can see. Yeah, go ahead.
Cool. I have some quick questions. Hey, Michael.
Hey, John. Good to see you.
Yep, good to see you too. I was reviewing well, first of all, I'm one of the people that you messaged that took a little while for me to get
That's
back
okay.
to. I apologize for that. But I took some time this afternoon reviewing the proposal and some of the supporting documentation that you included.
Mhm.
So just specifically about the structure. So the structure that you're envisioning is a facility or a fund that allocates 90% to a senior position and then 10% to a junior position. Is that correct?
Can do, but we can vary I'm not married to those percentages. Yeah, that's when you want to start those two, let's call them the wings. Yeah, the
Sure.
body is the pool that's straight 100% ownership. No, it's a pass through. But yeah, the wings I want to put on as soon as we bed down the body.
Mm-hmm. And just curious, who would you intend to provide capital for the junior or senior position? Would it just be investors through the platform choosing what portion of the tranche they want, or would there be
Sure.
capital that would be put up through market lend?
Yeah, to be honest, so far, market lend, we have some of our own family and friends' money in there. Yeah. We're not averse to putting some, if not a significant amount of that into the junior. But I don't want to make you somehow feel like we're looking for a free ride. Yeah. We can certainly, all day long, we can certainly push our holders into the pool so that pretty quickly the pool starts to get traction and, pretty quickly hits a few 100,000. I can't, guarantee exactly what date or anything like this, but it can be.
Yeah.
Because those are internal shareholders. So that's simply a matter of moving them from shareholder registry to pool.
Yeah. No, and the reason I more so ask about the actual structure of the transaction or of the fund is because I think according, and maybe I'm reading something incorrectly, but in the pool proposal PDF that you uploaded, I see a table that says defaulted or loan event statistics 16% defaulted. And so I wonder how that actually affects the profitability of the structure if there's only a 10% protection.
Well, that's not 16% over 1 year. That's 16% over about 7 years.
Okay.
So, you know, in actuality, the defaults are somewhere between 5-6% per year, and the defaults are way below what the actual interest rate is earning. I did a lot of thinking about how to, you know, how to deal with that, and the basic principle is that when the when that default rate goes down enough, the first step is the junior doesn't get any capital out. Only the senior's getting capital out. And then when it goes down even more, then we're starting to actually transfer capital from the junior to the senior. So I mean, really, the junior could, if the defaults hit something like 20% in a year or something like that, the junior could get hit quite hard, but before the senior even starts to feel the pain on its principal side.
Sure. Yeah. So that makes sense then why in the gross yield decomposition graph that you included, estimated loan losses are 7% because that's per annum.
Correct. Sometimes we're provisioning as much as 10%. Sometimes we're provisioning 5%. It just depends on how the performance, how the defaults have been, what's the outlook on defaults, and what the what the volatility is around it.
Sure, got it. And then just a couple more quick questions on the side of like raising capital and sort of traction. Obviously, it's critical to be able to show some early traction with products that we bring on the platform, and so some sort of anchor or seed capital typically helps.
Yes.
You guys have been around, I think so. You said the fund has been operating since 2017, right?
Yeah, we put in basically friends and family money. There's about $500,000 in there right now. So I think what we would do is we would start swinging that into the pool to start showing traction. But I don't want to kid anybody. I don't want to say that we're going to go from 0 to 10 million overnight. You know, I'll be very, very happy if in the first, you know, few, I don't know, months we get, you know, we go from, you know, we get to 1 or 2, and then I'll be really thrilled when we get to 5, and when we get to 10. It's a process. It is a process.
And have you just not really tried to go and raise external capital? Has it just been that you wanted to manage sort of family and friends money for the last 7 years and now ready to expand?
That's a good question. Firstly, this is kind of an off the beaten path product. And so we spent the first year and a half or 2 years doing nothing but betting ourselves down and getting all of that right. Then we got hit by COVID, and I got hit by COVID and a round of leukemia, not leukemia, lymphoma alongside of it. So that took us out for another year or so. And now I'm out there all the time marketing. I'm calling up friends and, you know, family offices all the time. I'm calling up you know, individual investors, and you know, it's just not easy to raise direct money for a product like this, but it's not to say that it cannot be done. It's a question of, you know, maybe I haven't been in the right place at the right time. And it's a different environment, and this is really a very, you know, niche-y strategy.
Sure.
But we are, you know, we are now in the Preqin database, and we have performance that outperforms most hedge funds, and we are in the Alborn Partners database. So, you know, we're kind of we're getting out there, and I'm trying to expand my outreach list at a rate to be able to keep keep broadcasting the message. I think the more you stay on people's radar screens, sooner or later they start coming around. You know, and we've had like reverse inquiry that comes out of nowhere, and suddenly we've got like, you know, $50,000 ticket walks in the door. from somebody like, wow, where did you come from? You know, so
Yep.
it will happen. It will happen. I just, you know, need to just keep bearing with it. That's all there is to it. It's a process.
But you would say one of the purposes of you know launching this on Centrifuge would be to raise capital through sort of the crypto ecosystem.
Yeah, because I think the crypto ecosystem can be a natural source of demand for it. I mean, there are people who have made millions in the system, and their problem is they can't really get those millions out very easily. And real world assets give them a way to earn money and work their way out of the system in a non-disruptive fashion. I think this was behind BlackRock and Janus. They know there's billions out there. And let's be honest, nobody wants to, you know, say they're in the money laundering business, but it is what it is. You know, it's a way of, you know, people are in the crypto. They got into the crypto, I don't know how, you know, and they're there, and that's what it is. And there need to be natural, legal, good mechanisms for moving the money to where they want it next. And
I think we should stay on topic and not do the money laundering
go
here.
down the path
This is
here.
a little bit off topic.
That's as
So
far as I'm going.
please stay on topic here.
Yes.
I just have one last question, or more of a comment is that you know, if you're targeting a 6% return to a senior tranche and you know you're looking at consumer credit, I think it's tough to stay competitive when you can get, you know, pretty much risk-free T-bill rates at 4.5%. You have corporate credit coming on chain for mid to high single digits. So 6% for consumer, I just feel like makes it a little bit difficult, right?
Yeah, it's not, you know, it's not a fantastic it's not a home run, but it also is remarkably stable and more stable than corporate debt. Corporate debt will come with a bigger volatility. So you have to look at the volatility that comes around the 6. And if you want treasuries, you go out, what, 10 years, and you start to get to 5 if you're lucky. And then you have 10-year volatility. So it's a different equation.
Right. But so much of it is liquid, right? And so
yes, absolutely. No debate there. No debate there.
Cool. Those are all my questions that just came to mind. Thank you so much for
yeah, no problem.
There was one question in the chat. You might have answered it already, Michael, but like, how much money do you have lined up to be invested? I heard $500,000.
There's 500,000 in the fund now, and you know we'll swing some of that for this for sure. I cannot say here and now exactly how much because I can't speak for every single one of those shareholders, but I don't see why they would not want to.
Yeah. So nothing. So I guess there's a follow-up question from the same DAO members that those are existing funds. So anything new, like any other investors lined up? I guess
those will come organically.
All right. Okay. I think this is gonna be it for it. Thank you, Michael, for coming again.
Thank you all so much.
Thank you for asking.
My only last issue is I think unless anybody really feels otherwise, I'd like to put this to I'd like to get this to move to putting on chain as a vote. So that's what I'd like.
All right, we can we are connected on both Discord and forum, so we can coordinate there and talk about the details over there.
Great.
All right. I guess
thank you again, everybody.
Thank you, everyone. Let's call it a day or evening. And thanks for coming, everyone, and joining. Take care. See you all. Bye-bye.
Okay.
Thank you, Ron.
Thank you, Orhan.
Yep.